I can trade alone.
Afternoon, everybody. How's everybody doing? Sorry about the noise today. Got builders in the back garden again, unfortunately. So if you hear a load of drilling and banging and stuff, that's basically all it is. Not a lot I can do about that, I'm afraid. So we'll have to bear with it, hopefully. Only for a couple of more days. Drive me a bit mad, but anyway, that's what happens, isn't it? Okay, so live room today, basically, there's not a massive amount happening in the markets, so I'm going to do a quick overview of what I closed out yesterday and what I've closed out today. We'll have a quick look at the pairs to see if there's any setups, but it's fairly quiet at the moment because obviously it's week before Christmas, so there's not a massive amount of movement going on in the markets at the minute, and obviously we might get quite a bit of slippage. So afternoon, Jacob. You'll have to let me know who's in here, because obviously I can't see who's in here now. When I was on Zoom I could see who was in here. Now all I can see is chat, which is fine, but obviously I don't know if you're there, so let me know if you Excellent. Wessam's just taken the jump and bought the EA. It's a really good set file for MT5 for the EA, which I'm going to be running in the new year live. So go and check that out. It's on the blog on MQL5 if you want to go and check that out. There's a link in the Telegram group to it as well. Right, so yesterday this morning I think, closed out Aussie dollar, New Zealand dollar. So the only thing I had running left for my trades was Aussie, New Zealand. Let's go out to hourly so we can see it a bit more. So with the Aussie, New Zealand, got in initially on the RSI extension. We had a continued squeeze for a couple of weeks on this one. So I just scaled into a couple more positions and we've been going sideways. So as it's the last day of the week, last kind of couple of days before Christmas for trading, I took an aggressive position yesterday morning on this one, just actually round about the end of the London session. So I had 0.2 running short on it. So I took a 0.2 here and escaped the whole lot down there. So banked just over 0.5% on it, roughly, something like that, on this move down. So got out of all of those. So basically I am flat now for Christmas, which is a lovely feeling. So I haven't got any positions on, apart from S&P. I'm always holding some S&P, in this account at the moment. So yesterday, you can see quite a few of my trades on here actually. So took a nice load of profit out of this there. Took quite a bit yesterday as well. Let's drop down to M15 so we can see. So yesterday, took some positions as we pushed down in Asia, started to scale in, waiting for them to take the liquidity from Asia, which they did, and got out there. Scaled in again as we pushed down in the New York session. Got out of a few yesterday. Escaped a couple more during Asia this morning when I woke up. So actually it wasn't when I woke up. These were TPs, look. So I had some TPs which got hit in this gap here. And it's continuing to push. So I've still got a few positions on this one. I did take a little bit of drawdown control on this. Got a couple of positions. These were 0.5s, so I took 0.2s off of them and scaled out yesterday with those. So just doing a little bit of drawdown control on these top positions, just to release a little bit of the pressure. It's not too bad at the moment. I'm not in a lot of drawdown on it. But yeah, hopefully we'll get up to ADR today. So S&P, I'm just looking for obviously a continuation push off of the bounce off the 72. So looking for push up to ADR, which is where my break even is. So if we can get up to there today, I will exit these positions down here and then take a decision based on price action at ADR as to whether or not I'm going to hold them for a couple more days or whether I'm just going to go flat completely for Christmas. It'd be nice to go completely flat. I've banked loads this month, so it'd be nice to be flat for Christmas and not have to worry about it until January. But we'll see. We'll see what happens with the S&P this afternoon. We might have a flat session, but you know we'll see. So that's where I am at the moment. Looking at RSI extensions and ADRs. So ADRs today. There we go. Just got another one coming there. Pound Swiss. So pound Swiss just hit ADR. Oops, sorry, wrong button. So the pound is a short. Obviously, the Swissy moves up and down all the time as money's being pumped in and out of the Swissy. So pound Swiss is a nice looking short. It's just taking liquidity potentially at the highs from yesterday. Sorry, not the highs from yesterday. Highs from the London session yesterday. Yeah, there's a gap. There's a gap at the top. Potentially to aim for up here. So that might be an area that they're looking to retarget, but we are short on the pound at the moment. So nice push up. So potentially a nice looking short entry ADR. So you just want to be looking to target the gaps basically on this as a scalp. So coming back down sort of 30 odd pips, roughly a quarter to a half an ADR. Wait for a reversal alert on 5-minute chart. Got quite a few gaps to the downside to aim for. It's not quite extended on M5. It is extended on M15. We've had a really good push today on this. So nice potential entry there. That was just come in. Euro New Zealand has hit to the downside. Obviously, this is the one that I was... no, I wasn't. I was in the Aussie New Zealand. So, yeah, Euro New Zealand's hit to the downside. So, turn that off. So Euro, obviously, we don't really want to be taking longs on. Any of these ADR hits you get, obviously, as you can see, they bounce very nicely off of ADR. Got a reversal alert on this one, but it's Euro, and I don't want to be taking longs on the Euro, so I wouldn't really be looking at a long on this one. You can do. It may well push up, but as you can see, we're very, very choppy on Euro New Zealand at the moment. They've just come down and done a gap fill there on M15. So potentially looking for push back up into there, maybe, but more inclined to look for shorts. So with this one, I'd probably look at just some kind of pullback and drop, but not really looking for longs on Euro New Zealand. Not looking for... Sorry, 1 second. Let's turn that off. So not really looking for shorts on, for longs on Euro New Zealand, looking for shorts on that one. New Zealand dollar CAD. Nice hit to the upside on that one. We've hit 125 ADR, just had a reversal alert on M15. So that's a nice reversal there we've got going on M5 as well. Really, really, really big, strong push there. So likely to retrace back down to this area here, which is the most recent resistance, which will hopefully turn into support. So you've got a good 20 odd pips drop to this downside on that one. May well come up and retest as well, but New Zealand dollar CAD is a long at the moment, but at the moment, as I say, it's the week before Christmas. So if you are looking to get into entries, low time frames are the ones you want to be looking at. And there's a nice run on liquidity gone in there. So they've just taken out all the stops of everybody that went short there. They've just taken out that, and obviously then potentially another push to the downside before a push back up again. But New Zealand is a long. So all these New Zealands that have hit to the upside, we were expecting New Zealand dollar strength to come through, and obviously all of these have pushed up now. So New Zealand Swiss, same thing, very, very nice strong push. Been waiting for New Zealand dollar strength for ages, and it's just starting to kick in now. So you can see all these gaps we got to fill on the New Zealand push down, especially on the US dollar. So any kind of pullback on these this afternoon into London or into New York, look for long opportunities on all of these. New Zealand yen, New Zealand US, and New Zealand Swiss. So pullbacks and then longs on all of those. So ADRs today, nothing really of interest. They're all going in the direction we would expect them to go in. New Zealand long, Euro short. But the pound is the only one I'd be really interested in taking. So taking a short on that one. Westham, you're in New Zealand dollar CAD as a short, are you? Okay. Yeah, it's a good ADR hit. With any of these, ADRs are very scalp-based positions. So, the ADR dashboard and the ADR indicator are really scalping. So you can get into these and just look for a quarter to a half an ADR as a target on them when you get a reversal alert. So this one here, we've got 50 ADR. So you're looking roughly half an ADR there, just under to these most recent highs. So that would be where I'd be looking to take it as a short. But whatever you want to target, really, it's entirely up to you. But a quarter to a half an ADR are ideal for ADR reversals when you get them. But you can't, if you get into one of these, I'm always getting into ADR reversals, ideally in line with the Commitment of Traders report. So I'm looking for where the futures positions are at the moment. And with New Zealand dollar, they're long. With the Canadian dollar, they're short. So ideally, I want to be taking longs. So if I get an ADR hit to the downside on New Zealand dollar CAD, I'll be more inclined to hold that for a day, half a day. If it's counter cot, i.e. counter trend, then I'd want to get out of it as fast as I can. So quarter to a half an ADR is more than enough of a target. So 20 odd pips on that one. But yeah, good. It's come off of ADR very nicely, that one, so far today. So we'll see what they do this afternoon. So on the 4 hours, we had a look at these, obviously, yesterday. We look at these every day. CAD Swiss. CAD Swiss is extended on 4 hour to the downside. So we had a really, really good, strong push, and we are due a pullback. So this move here, which was potentially the support. So we had a really nice bounce off of that, and then it completely crashed through it. So this move here was the first pullback, obviously, after we started this down move. So there's your high, your low, your lower high. We've just put in a lower low. So market structure on this is obviously to the downside at the moment. So we'd be looking to put in a lower high next. So somewhere around the 24 to the 72 range is where I'd be looking for that to pull back into, and then potentially looking for shorts out of there. But short term right now, this one is a long. So we've just taken out obviously the liquidity down there. So looking for a pullback up there. So you've got a good long opportunity at the moment on it, but it is counter trend at the moment on that one. Obviously the trend at the moment is down, obviously, as you can see. So only short term on this. Looking for pullback and then continuation to the downside. Euro CAD. Euro, obviously, always looking for shorts on the euro. This one's pushed up very, very nicely. Potentially at the moment, we are putting in a nice market reversal pattern there. Nice looking M potentially forming on this one. So looking for shorts on the euro, always will be looking for shorts on the euro until they can give us any inkling as to why they would strengthen up. But euro is very, very weak. We've had a really nice looking rejection wick going up there. So looking for some kind of drop on this one at some point soon. So very nicely extended to the upside. Really nice looking short opportunity. If it wasn't the week before Christmas, I'd be jumping all over this one. I just don't want to get into any positions that I've got to babysit over the Christmas period and Christmas break. So, but yeah, very, very nicely extended. If you do want to get into positions, you're going to hold them. Perfect. So market structure on this one, obviously, we've got the lows, high, higher low, higher high. We'll be looking to put in some kind of higher low somewhere in these gaps. But saying that, obviously what I would expect to happen is early new year is euro to start to change structure and come all the way back down again. So unless there's any reason why the euro should strengthen up, we'll be looking for shorts on that one. So very nicely extended. It's in perfect spot to take shorts from. So really, really good short opportunity, that one. US dollar CAD. US dollars are long. So I'm looking for long opportunities at the moment on the US dollar. So we had a nice reversal alert there, straight off the 24 moving average, really nicely extended on the RSI, which gave us a beautiful bounce. So nice low, high. We pulled up into this area of potential resistance up here, and it's just started to reject. So we'll see what happens with this one, but there's a beautiful rejection candle at the highs there, nice shooting star, followed by a nice dip. But obviously, being Christmas, we are stuck in consolidation at the moment. But it's in exactly the right spot I would look for some kind of pullback. But for me, I'd rather wait for this one to pull back down somewhere into the support rectangle here, or somewhere down here, and then take a long. So if we can get a nice pullback over the next few weeks, I'll be looking for long opportunities early new year on that one. But right now, potentially it is a short. It's nicely extended, but I just get the feeling you're going to consolidate. Looking for shorter time frames, M5, M15, for scalping opportunities rather than anything long term. But that's it on the 4 hours. So there's a few things extended. Euro CAD being the best of the bunch for a short. So if this one does want to push up any higher, got the resistance drawn in at the moment. So this area here is obviously the other area that I identified as good support resistance. So if we are going to push up further, there's a really good opportunity for a rejection point then. Obviously, we'll still be extended on RSI. So we'll be looking for this kind of move to happen, push up again and drop. So similar sort of thing on that one if we get up to there. Failing that, I think probably we're coming back up all the way up there. But very unlikely the euro is going to have enough strength. We're going to need a really weak Canadian dollar to get that up there. So there, Euro CAD. Nice looking short opportunity on that one. Moving over to the hourlies. Only thing we've got extended on the hourly is New Zealand dollar CAD. So New Zealand dollar CAD, really nicely extended to the upside. This is the ADR hit today as well, obviously, which is why you've got an RSI extension. The 70 level, 75 level is where I really start to get interested. Nice potential short, obviously. If you look at this on M5, we've got the reversal alert, but it's just grinding. Just don't expect to get a massive amount of movement this afternoon in New York. I just get the feeling we're really going to start to struggle for movement from sort of this afternoon, tomorrow onwards. So, but not really aligned correctly. I'd much rather be looking for long opportunities on this one as well. So waiting for a pullback and then a long. This is where I'd be looking for longs somewhere off of there or somewhere around there. So pullback and then continuation. So yes, that's really all we've got at the moment. Not really an awful lot happening. Very, very quiet. As you would expect, because it's the week before Christmas. So I haven't really got anything else planned for today. I'm literally just going to be managing S&P this afternoon. So looking for some pullbacks on the S&P to long. But apart from that, I'm not going to get into any more positions, as I say, because I'm nice and flat now. Ready for Christmas. Had a good month. So yeah. Anybody got any other pairs they want to look at specifically at the moment? Anything they're in that they want to have a look at? So plan for moving forward for next year, just while you're thinking about pairs you might want to look at. What I'm going to be doing with the live room in the new year is running 2 sessions a day. Going to do a morning session around 8:30. Which is London Open basically, where we're just going to have a look at the charts. It'd be quite a quick overview, really just having a look at news and having a look at the RSI extensions to see where we are and see if there's any good opportunities to look for in London for entering to positions. And then the afternoon session is going to be at 2:00 UK time, where we're going to be looking at the New York session, obviously, start of the New York session. And then I'm going to be doing some scalping on S&P as well. So M5, possibly M1 scalping. Just developing a little bit of a strategy with the market reversal alert indicator at the moment for S&P. So that's the plan, basically, for New Year. So that is what I'll be doing. I'm also now running multiple EA or multiple accounts for the EA. So this account here is going to be probably a 3K account running the S&P. So I'm going to be running the EA on S&P. I'll fund this one over the next couple of weeks. And this is going to be doing the S&P strategy that returns roughly 60% a year. So I'm just going to let the EA trade the S&P for me automatically on that account, and then we can monitor that one. I'll have that set up in a Trade Explorer, so you can monitor that one. But closing this one down, this is the one that's been running. Oh, sorry, no, this is a different one. This is running on my strategy quant strategies, which is doing pretty good at the moment. This is the one that's been running the H1 M5 EA, which is done 15% in... When did we start this one? Can't remember when we started this one. October, 11th of October. So where are we? 11th of October, November, December. So just over 2 months. So this is doing somewhere around about 7% a month. So I've also got this now set up on Robo Forex. So what I've done is I've set up 5 Robo Forex accounts. Each of them is running an individual strategy. So this one is running the H1 M5 mean reversion set files. This one is running the ADR reversal set files. This one is running H4 M15. This one is running trend pullbacks. And this one is running H4 M15 on every pair in line with COT. So what I've done with these ones is obviously, if we look at US dollar CAD, for example, the EA is set up with exactly the same H4 M15 strategy that I trade bread and butter every day, but it's only taking trades in line with COT. So obviously the COT report, US dollars are long, CAD is a short. So we're looking for long signals only on US dollar CAD. So if we've got a neutral CAD, neutral COT report, for example, like CAD yen, I'm trading both directions. Okay, so that's the plan for the new year. So I'm going to be having these 5 running. I've got Trade Explorers set up with my FX book for these. So we can just basically, I'm just going to let these auto trade for me. These are 10k accounts, as you can see, and they're just going to basically trade. So I'm going to let the EA do that for me, so we can monitor exactly what it's doing next year. I will also be obviously running the EA on S&P, and I'll be doing my normal manual trading as well. So there'll be lots of stuff going on in the new year. I've also got a top step evaluation that I'm doing at the moment, which is just I'm just testing some EAs I generated with Strategy Quant on a top step account, just to see what they do. Just as a kind of little experiment, if you like, really. It's not doing too bad at the moment, about $1,000 down, but it can get $1,000 back in a day, no problem at all. And obviously it's not ideal conditions at the moment. So I'm just going to let this run and just see how this works as well, because I've got 3.5k drawdown in this. It's 150k, I think it is, account with Top Step, or 100k, I can't remember what I got. But I'm letting that run as well as a little experiment. So we'll keep an update on that in the new year as well as we're going along, just to see how that performs. But this is just an evaluation with Top Step at the moment. It's not a live account. So that's the plans for the new year. So hopefully you can all join me doing that. And obviously I want to try and do a lot more scalping. And obviously that really only does work well in the New York session. So I'll be doing more S&P in the New York session. So pairs you want to have a look at. Euro New Zealand. I've already covered that one, yeah. So yeah, Euro New Zealand. You're short on that, aren't you? I think you're in New Zealand. So yeah, it's just had a little bounce off of ADR. So yeah, looking good. Just scale in. So, I mean, like I said, yes, I think I said to you yesterday, didn't I, or the day before? Can't remember. When I was in Aussie, New Zealand, exactly what I did. So what I did was got fed up with it because we were consolidating hideously. And I said, as soon as we get to the highs, short it heavy. And when we get down to the lows, get out. Yeah. So we pulled up into these highs. I took an aggressive position up there, which was a 0.2. I had a 0.2 on all of these running. So I took a 100% aggressive position, which brought my average to there from somewhere down there, and immediately gave me the exit at the lows. So same thing with that, with your Euro trade. Kind of missed it. It was yesterday, the entry. It pushed up actually more higher than the highs yesterday, didn't it? So, but yeah, that's a really good looking wick off spring actually there at the moment. So we had this daily candle here. Let me just zoom in so we can see what we're doing. So the daily candle that I identified here with these lines, obviously we did actually close outside of it yesterday. So we broke out of the range, which we'd obviously had inside bars for days and days and days and days. Yesterday was the first time we pulled out of it, and today we've pulled straight back in. So you'd be forgiven for not taking an entry there because it was actually a breakout, but it's failed, which is what most breakouts do, which is why the market makers make so much money, because all they do is they take everybody's stops. So nice big push out, and obviously pull back in. So any kind of pullback, you can obviously try and short that again. It's just tough to be looking at days of longs and decide if it's time to go short, especially with an aggressive entry, especially when you're not sitting on profit. Yeah, it's difficult with these, especially with the euro at the moment, because the euro has obviously been uncharacteristically strong over the last week. But I don't think it's going to hold. But you know, it's a very difficult time of year to trade anything. You know, there is potential for market structure to continue, but that's going to require a very weak New Zealand dollar and a mediocre euro. We've got a very weak euro long term, and the New Zealand dollar, you know, has been weak when it's been expected to power up. So for me, now you've had the reversal alert there on the hourly. Potentially that's a good turning point. So pull back and drop. And there's plenty of room to the downside, obviously, to go on this one as well. So you can come all the way back down to here. But, you know, whether it's going to happen this week or not, difficult. So hence why I wanted to get out of mine, really. So, David wants to look at Aussie US. Aussie dollar US dollar is a short. So Aussie US, obviously, if you're using moving averages, these are the institutional moving averages, as I call them, which is the 24 and the 72 moving average from the daily. So it's the daily MA, just replicated on the 4-hour chart. So it's in a downtrend at the moment. Obviously, we've had a couple of poke ups, but we've made a new low. So the market structure is still a short on this one. We're coming down. So we're looking for that kind of movement on the Aussie US. Expecting US dollar to power up, but at the moment it's not. So it's just obviously flat at the minute because it's Christmas. But when the US dollar does start to power up, that will get pushed back down again. So you've had a reversal on the 4-hour here. So wait for a retest basically on this one for shorts. So I would expect on this one some kind of pullback up into this area here, and then short probably back down to there or to the lows or even lower. But the entry was here last week, really. So when we tap up into anything you see trending nicely, the first pullback into the 24 moving average is usually a charm. So any kind of pullback into the 24 to 72 area, big, really good area for shorts. Okay. So that's Aussie US. So I haven't really got anything else planned for this afternoon, as I say, because there's nothing much to trade at the moment. As you can see, the RSI dashboard's flat. We're flat on the hourly. We've hardly got anything lit up on the 4-hourly. There's light liquidity. News-wise, this afternoon, we've got retail sales at 1:30 in half an hour. So that's for the Canadian dollar. We had the Aussie monetary policy meeting minutes this morning. So really all you've got is CAD this afternoon. Retail sales do tend to have an impact, but it's only short term. We wouldn't be looking for anything long-term fundamental to change off the back of retail sales particularly. But we'll get some price action movement off of that potentially. The CAD is still a short. And getting shorter, so there's more money going short on the Canadian dollar, so I'd be looking for short opportunities on it at the moment. So looking at the CAD pairs, CAD Swiss is obviously all the way down there still. CAD Yen still embedded down there. So probably the best opportunity is US dollar CAD, but that's too extended. So you want to pull back and then long it. So yeah, it's going to be quite difficult to trade anything CAD this afternoon. So probably leave alone. But the only other news we've got at the moment this week is the US dollar. We've got GDP tomorrow, consumer confidence, and then on Thursday we've got CAD GDP and PCE. But as I say, just be very, very careful with liquidity around these areas. If you're going to try and trade it, you're going to obviously have potentially light liquidity, lots of slippage, lots of big movement. So if you're going to get into anything, bear in mind you're not going to get out of it probably till January. So, Miguel, hi. What settings and time frame? What are you talking about? What settings and time frame for what? Is doing better for me. What settings and time frames are doing better for me? I trade H4 and M15 the majority of the time, but doing a lot more on hourly and M5 as well. So if you go and watch the Boocamp videos on my YouTube channel, there's a playlist for the position trading Bootcamp that explains exactly how I trade. Basically, looking for extensions on RSI and entries on lower time frames. Obviously, the higher the time frame you trade, the more stable and successful you'll be, because obviously you're trading less chop, you're trading more reliable price action. So things like shooting stars and hammers and this is what I call a 3-bar reversal, where you get a push down, a doji or a hammer, and then a big bullish candle. So that's a 3-bar reversal. They're much more reliable on the higher time frames than they are on the lower. So obviously you see you've got a reversal alert off the indicator there, which then gave that move to the upside. But you had the price action that happens, and then the indicator confirmed the move. So I'm trading 4 hour, but I'm entering on M15 on the lower time frame. But my positions are still taken based on 4 hour and extensions of RSI, which is my bread and butter basically. So when we get extended on RSI, I'm looking for price action reversal in line with the trend. Do we have a COT tutorial? No, we don't have a COT tutorial. Basically, I'll go through COT for you now. For those interested. So COT stands for Commitment to Traders. There's a link on the website to the COT report, and there's some information there about the COT report. So the Commitment to Traders report is kind of like a sentiment report, which is published by the CFTC every week on a Friday after market close. And it basically, every large institution, whether they be a hedge fund, a bank, or a large speculative trader, or I mean, you don't get large speculative traders as much, but anybody that basically trades on the futures market through the CME and the various other exchanges is required to disclose their positions, basically. So the Commitment to Traders report, which is published by the CFTC, is a report of the open interest of futures contracts, which basically gives you an idea of which way the market is positioned on each currency. So, for example, here, this measurement here, this number, is what a lot of people refer to as, it's basically the flip, which is what its kind of nickname is. And it really measures the strength of positions long or short, of open interest, which is open positions in the futures market. So a negative number basically means there's more futures contracts short, i.e. there's more people speculating short on that particular currency. And obviously a positive number means there's more long. And the COT report is it's like a scale. If you think of it like a like an RSI or a stochastic or any oscillating indicator, you've got a midline there, which is 0, right? And then you've got a high and a low point, yeah? So where we are here with the US dollar, for example, is 3.6. So we're just above 0. We're just up here somewhere. And you've got things like the Swiss, which is minus 1.3. So it's just down here. What happens is, as you get more open interest long, it gets to a point where it will eventually peter out and start to reverse the other way. So the market shifts long and short on currencies, i.e. they're long on the US dollar, something fundamental will change and the market will shift short on the US dollar, then they'll go long on it, then they'll go short on it. And that's the oscillations you see basically playing out in the market on a daily, weekly, monthly basis. Yeah. And you can see that when you're looking at a chart using moving averages. We look at the daily. Yeah. The market's short on the US dollar. The market flips long. Market flips short. Market flips long. So it's this flip-flopping movement, and that's basically kind of what the COT is measuring as such. The difficulty with the COT is that you can't use it as a timing tool. It's a sentiment tool. So it's giving you an overview of the market and how big players are positioned. So they are long on the US dollar, basically. So what we're saying is we want to be really, if we're staying in line with what the market is intending to do in the future, we want to be looking for long opportunities on the US dollar. We want to be looking for short opportunities on the CAD, the pound, the euro, the Swiss, the yen. We want to be looking for long opportunities in New Zealand and short on the Aussie. So that's really how you use it. You can't use it for timing. It's just an overview of where the big players are positioned. Now, the other thing with the COT you need to bear in mind is it's a long-term view. So when institutions and large players are getting into the market, they are getting in and they are holding contracts, typically for anything up to 3 months a lot of the time. So this is an overview of what will likely happen to that particular currency in the next 1 to 3 months, 4 to 12 weeks, roughly. Okay, so you can't use it as a, right, US dollar has just flipped. So for example, here we had the pound flipping from long to short. That doesn't mean all of a sudden the pound's going to drop. It just means there's less people longing the pound than they are shorting it. Just because you've got a massive institution suddenly shorting the pound doesn't mean the pound is going to come down straight away. The pound will probably drop and weaken over a period of the next few weeks to few months, but we can't say it's going to suddenly drop now. So you can't use it for timing. It's kind of like your bird's eye view, your top down view of the market. So at the moment, I want to be taking longs on the US dollar. I don't want to be shorting it. I want to be longing New Zealand. I don't really want to be shorting it. You'll see from the New Zealand dollar has been actually fairly weak over the last few weeks. It's been massively long, as you can see, for an awful long time. But the New Zealand dollar hasn't necessarily been strengthening, but it just gives you an indication. And what you will find is, if, as the New Zealand dollar has proven to us, it can go like this, yeah, long term, okay, even though the market is positioned long on it, what you will find is, this is obviously a flattened out view of it, what you will find is, as it's coming down, these pushes will be stronger and easier to get out of as it comes down. So by only taking positions long, we will get these strong pushes which we can escape our positions on, which is why I use it. So even though a currency may well be going down while the COT report says long, it gives us the confidence that we are going to get strong pullbacks. Yeah, and this is where the RSI comes into it. When we get extended on the RSI, that is when I'm looking to position long on the New Zealand dollar. Or, for example, going short on Euro New Zealand, as we saw, which is a position that I just got out of yesterday. Yeah, so Euro New Zealand, sorry, Aussie New Zealand I was short on. Other people are short on the Euro New Zealand, yeah. So, you know, you can see from this one, obviously, it gives you the confidence that you know there's going to be some kind of strong movement coming in as the New Zealand dollar strengthens up. So here, for example, yeah, beautiful entry, New Zealand move, pulls back, New Zealand move, pulls back, New Zealand move, pulls back, New Zealand move, yeah, pulls back. Start of the New Zealand move hopefully happening now, and then we'll start to pull back down to there. But it just gives you an idea of a direction to take. So if you're one of those people, which a lot of people are, a lot of traders are, that struggles with directional bias, knowing which way to go, you can use the COT report to give yourself a set of rules. So basically, I'm longing the US dollar and I'm shorting everything else at the moment. Yeah. So there's a lot of pairs out there that I can trade right now. So if I see, as I did today, on the RSI dash, Euro CAD extended, I can go, right, Euro CAD's really, really extended. What are we expecting the Euro CAD to do? Right, well, the Canadian dollar is a short and the euro is a short. So there's no real directional bias on that one. So let's just assume that we can get in and we're just going to ride the waves up and down on the RSI. So it's really, really, really extended. We're expecting a profit take. Everybody that becomes a buyer has got to, at some point to make profit, become a seller. Loads of people have bought. What are they going to do? Get out of their positions. They're going to sell. So the RSI tells us, not in this particular case, but this is the daily. Let's move down to the 4 hour. So RSI is extended. Yeah. Everybody that's bought here, buyer, bit of consolidation, more buyers. Nobody's taken profit on their move yet. So we're expecting a profit take move to come in. RSI gets extended because it's been a strong move. The COT report gives us an indication that we're expecting the euro to be weak. We're also expecting the CAD to be weak, but so we can take a short on it. So that's basically how I use it. If you don't want to use the COT report, because as I say, this is a very, very long-term view. You can go and get all this data yourself from the CFTC website. You just download it, basically. Every Friday it's updated. It's a massive spreadsheet with tons and tons and tons and tons of columns in it. If you want to study it, go to this website. There's lots of videos on YouTube, lots of information on the web about the COT report. But basically, that is how I use that. If you don't want to use COT, you don't have to use COT. If you're going to use anything, though, I would recommend using moving averages. Yeah, and these moving averages are what I call the institutional moving averages. So these will tend to be in line a lot of the time with the COT report. So this one here is the 72 daily moving average, the 72 trading days in a quarter. This one is the 24 moving average, there's 24 trading days in a month. That does include Sundays because Sundays are traded in the futures markets. So those are the moving averages that I use, quarterly reporting and monthly reporting. Yeah. So you find that basically price will pull back and respect these two very well. And I use them on the 4 hour to tell me and fine tune entries at those moving averages. So if we've got Euro CAD short and the COT report says Euro is a short, if it said CAD is a long, even better, but in this case it's both of them are short, then those two tie up. So COT says short, moving averages say short, therefore I'm going to take shorts. Yeah, does that explain a bit more detail? It is a very, very, very top-down view, as I say. You don't have to use it. I like to use it. It just gives me confidence because I know that if I'm going to go into a squeeze, if I'm going to go into drawdown on any of my positions, if I've got this backing me up directional bias, it gives me a lot more confidence to hold those trades rather than trying to scale out of them and do emergency procedures on them. Because I know, you know, if the US dollar drops like that and this stays like this week after week after week, the market is positioned long on the US dollar, I know that this is just a squeeze and we are going to get that move. And it happens 95% of the time. The euro, I mean, look at the euro on the COT report. Yeah, we've been short bias since March on the COT report on the euro. Yeah, I mean, it's a short. The market is short on the euro. You get the odds push up, and that is exactly where I pounce. That is where I pounce and take that move. That is where I pounce and take that move. Yeah. So the COT report tells me to go short on the euro. So I'm waiting for the pullbacks to go short on the euro. Yeah, that's the way I use it, and that's the way I use it. And then obviously couple that with the RSI dashboard. to tell me when the moves are strong in my favour. So I can look at this and go, euro is extended to the upside. I'm looking for shorts. Brilliant. US dollar is extended to the upside. I'm looking for longs. Not good. Don't want to take that one. I'd rather when this goes green, I'll then start to look at opportunities on the US dollar CAD. Green means longs. Yeah. Gives you confidence in bias. Yeah. But I say it's not to be used as a timing tool. It's more of a top-down overview of where the big boys are. Yeah, the big boys in the futures markets that are dumping trillions of dollars a day into this marketplace. Those guys, that gives you an overview of roughly what their positions are, but it is rough. You know, it's something to give you confidence. That's really all it is. And you can trade against it, no problem at all. If you're trading low time frames, H1M5, for example, the COT report doesn't come into it. On the 5-minute chart, forget it. You don't need to know what the COT report's saying. You can go long, you go short, do what you like. You're trading chop down here. M15 to a certain extent, but H4, I want to be looking at in line with COT. Yeah, so euro pound, we've been short euro pound for months, haven't we? Yeah. We've been shorting this thing constantly. We shorted that, shorted that, shorted that, shorted that. Yeah. Because the COT told me the euros are short and the pound was a long. The pound is now also a short. But at the time of taking all these trades, that was the bias. So that's why I use it. But even, you know, if you never ever looked at the COT, didn't even know it existed, and you were just trading RSI extensions and taking reversal alerts every time you got an extension as well, you'd have taken all of those trades anyway. You would have also probably taken all these longs down here. So you'd have taken longs down here. But look what happens, yeah? The bias on the pair is short. Right, look what happens at these RSI extensions. Collapse, collapse. Look what happens when you're trading against the COT. Entry, scale in, scale in, scale in. Got to wait a month to get out of that position. When you scaled in with the COT, this thing just came down like an elevator shaft. Climbs up the stairs, falls down the elevator shaft. It's a well-known saying in trading, isn't it? If you are only getting in the elevator shaft in line with COT, you'll be more successful more often. That's what I found. That's why I use it. So there you go. There's your overview of COT. Hopefully that answers everything. Okay, so has anybody got anything else they want to look at, or any other pairs, or any other questions on anything in particular? As I say, I'm not really looking to take any trades this week. So these live rooms this week are just going to be fairly short. Because as I say, I don't think we're going to find a lot of opportunities. And as I say, I don't really want to be trading in illiquid markets. So I will just be concentrating on my S&P positions and just scaling into the S&P basically. Hopefully we're going to get this Santa rally everybody's been talking about and promising. So if we are, he's a bit late, isn't he? He's only got 3 days to sort it out. The market's shut Friday. So we've got today, tomorrow and Thursday basically for Santa to make a new high. So fingers crossed we will have what we're looking for. 2 ADR. So it's not far, is it? We can do that. So we want a 2 ADR move to the high. So basically what we're looking for is 2 up days. Yeah, so we've had 3 down days. Now we're looking for 2 up days. You see the S&P's like clockwork. 3 down days, up. 3, class that as well. 3-ish out down days, up. Couple of down days, up. Yeah, a few down days, up. A few down days, new highs by the end of the week. Be lovely to end the year on a high up there. So hopefully New York can kickstart that this afternoon. So I will be looking to scale in further if it does come back down. I've got 2 positions, 1 at break even, 2 positions in profit. We may well pull back down and have another go at the lows. Unlikely, but we may do. And if we do, I'll scale into more positions ready for the bounce. Okay, can we have a control for the profit loss numbers fonts on the Trade Manager dashboard? I can put that on the list. Yeah, I can do that. I thought there was one. Maybe there's not. You got a font control there, size control there. I mean, obviously you need to muck about with spacing, distance between rows and stuff, but you can control it in there. For those that need glasses, like me. But yeah, we can. I can have. Send me a message on Telegram and explain what you want to do with the dash, and I'll have a look at maybe giving control if it's not there already. Always can look at fine tuning and tweaking stuff. Pound US dollar. You want someone that's look at pound US dollar, Richard? So pound US dollar at the moment is a short. Even more short now. The COT report has flipped short on it, obviously. So on the pound, that is. So yeah, I'd be looking. We've just had a reversal alert on the 4 hour. So you can see we've had a bit of a consolidation. We had this push back up into the 24. We've given a reversal alert. So we've got new market structure potentially forming. So your market structure, obviously, there's your high. That's where you got the alert. We didn't really make a new low, though. So at the present, what we are kind of in is a quadruple bottomy type situation here. But I would say anywhere, this high here, anywhere in there, if it pushes up, would be good looking short opportunities. But like I say, at the moment, it's just Christmas. So, you know, just be very careful looking for any long-term trades on anything. But pound US, I'd be looking for short opportunities on it on all time frames. Just had a reversal alert on M15. We just taken out yesterday's high. Looks very nicely bearish at the moment. So yeah, but it's to say, at the moment it's very difficult to tell what's going to happen in the market. Basically, they can take the market where they like at the moment, and they will do, or they'll take it nowhere. You know, don't forget, bankers have pretty much closed their books, most of them by now. We are end of month, we are end of quarter, we are end of year. So reporting wise, quarterly reporting, end of year and month reporting is all done. This week is about driving your Ferrari to the local pub and getting hammered. They're not really working. There's a lot of transactions going to be happening. Obviously, Forex market is driven by financial transactions, obviously. So there's a lot of the banks have still got to execute their customers' orders. They've got to do financial transactions backwards and forwards. That's why the Forex market exists, because you know a lot of it is just commercial transactions happening place. So that's all still going to happen. You just find there's an awful lot less of the speculative transactions going on. So which is why you tend to find there's a lot less movement. And the movement that is there tends to be very whipsawy. So we get the big strong move and then the retracement, the big strong move and then the retracement. You'll find there'll be big strong moves out of the Asian range, but then it'll just come back into it again. So, you know, any ADR hits quite possibly are pretty good to take at the moment, because there's a strong possibility all it's going to do is push out and then pull back. So, but equally, you will get slippage. Like, you know, this could well be a slippage move here. You know, there's a lot of movement. There's no reason for the New Zealand dollar CAD to have done this. There's no news. There's nothing. And the New Zealand dollar, obviously, if there's been a ton of transactions gone through the New Zealand dollar and there's not a lot of liquidity there, i.e. every time they want to buy, they need a seller. There's got to be a buyer and a seller in each transaction. if they're buying and there's not enough people wanting to sell, they're going to have to go higher to find prices to get their orders filled, which gives you slippage, and that's basically what slippage is. When there's light liquidity at the Christmas week, you get more slippage because they've got to reach further to fulfill the orders. The orders have still got to be placed in the market because customers want transactions to be done. It's just if they haven't got enough people to trade in the opposite direction with, that's where you get the moves. And as a position trader, I don't want to be caught on the wrong side of one of those. But for scalping, if you're going to use a stop loss, concentrate on highs and lows. Wherever you see a high and a low, yeah. So just look at areas of support and resistance, obvious support and resistance, and look for price action around those and reversal alerts around those on lower time frames. That's all you can really do this time of year. But as I say, I've had a good month, so I don't really want to jeopardize the month and get into a load of positions I've got to hold over Christmas. So. Okay, so that's really all I've got for you today. Tomorrow, 125 ADR on New Zealand dollar Swiss. So it's pushing hard, that news. There you go. We're looking at it right now. So yeah, pushing hard New Zealand today at the moment. This one's just retesting that reversal alert. Big gaps here. Look at these gaps. So big gap there. Gap there. Gap there. This one got partially filled, so I'd probably cancel that one out. Big gap there as well. So loads of potential downside. Good looking short that. So that's all we've really got for you today. I'm going to do another live room tomorrow. It's going to be the last one this year. So I will do another one tomorrow. Be 12:30 again tomorrow, and then the new year we'll start the new timetable, having the morning and the afternoon sessions at different times. But yeah, I'll be around tomorrow. So if you've got any questions or anything, feel free to ask. But as I say, there's nothing much I'm getting into. So I will leave it there for today. But anything you need, come and visit the Telegram group. You can always ask questions in the Telegram group. If you've got any questions about the indicators, there's links on the YouTube videos to the website, themarketstructuretrader.com. And obviously, you can come and ask questions in the Telegram group if you've got any questions about strategy or anything. But there's loads of videos on my YouTube channel about how I trade, the indicators I use, etc., etc. So go and check that out. Okay, guys, so I'll leave it there for today. Anything you need, let me know in the Telegram group. Otherwise, we'll be back tomorrow, same time, and have a good afternoon. I'll see you then.